everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for the futures markets. This is where we take a look at our big six markets, in this case the Bund, gold, bonds, crude oil, Nasdaq, and the S&P, and we formulate an attack method for tomorrow's trading. We're looking to put together a plan of attack so we're as prepared as possible. Now tomorrow's trading, that would be Friday, it's the 10th of the month. Now, fingers crossed, man, I'm really hoping that we can get some price action like today for tomorrow. I don't think I can cross my fingers anymore. They might just snap off. It's really refreshing seeing these markets kick back into gear here. And well, yeah, I'm really hoping that that continues. Before we jump into the charts, though, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. And that will add you to our email list so you will know all the time when these come out. You'll never miss a beat. And we also talk about different statistics, different stocks that we may be keeping an eye on, etc. So lots of really good information there. And along with that, at the bottom of the page in the blog, we have our market psychology videos, which we do every single day, going over different psychological aspects of the markets that we can learn for more information going into the next day. And then we also have our morning prep levels that are loaded up every morning as well. So lots of good information there. Make sure to check that all out every trading day. Now, starting off with the Bund had some really nice movement overall. Lots of good movement. We had a little bit of a range this morning, not a whole lot going on, but then we started getting a lot of that ECB stuff coming out. Big breakout to the downside, and then we acted as resistance right here. Major 60-minute support was coming in at 160.19, and it held as resistance on the back edge. Broke through it. Held it. Very nice area of response that we're getting there. And we also found a base that was put in at around 159.82. So with this drive lower, what are we really looking for? Well, obviously we need to be sellers, but I don't really want to sell this far down. We are getting a nice little bull correction here, and maybe we just need to wait for this to kind of ride itself out and then start looking for a possible bearish turn again. That 159.82 area will be a nice level of resistance. That was the major area of support here, both on the 5-minute chart as well as on the 60-minute chart, and I'm looking for that area to be resistance on the retest. If they do decide that they want to start poking their head a little bit higher, we do have that major resistance at 160.19 that I would love to see the market come back to. But the chances of that coming back all the way there tomorrow, maybe not, right? So definitely looking to sell, but looking for some better prices. Over on the gold, a little bit more range bound, lots of back and forth on gold today, in relatively choppy, lots of support areas, lots of resistance areas, just kind of bouncing back and forth out of these locations. So the one thing that we really need to be careful of is, although we do have a fairly decent trend in play in the bigger picture, right now we're not getting a lot of conviction on one side or the other. So because of that, gold being, a little bit choppy, sloppy, we are probably better served to treat it as more of a range. Buy low, sell high, or if you want to stick with the trend, try to sell as high as possible so that you get a better price, because very frequently you'll have a very nice move and it will pull back in on itself, and you would have easily been able to get a much better fill if you were trying to get into that sell move. So keep that in mind going into the overnight session, into tomorrow's trading. If you're looking for an entry, you might be able to get a little bit more out of the market from the way that it looks at the moment. Overall, though, still looking to sell. We have a larger wedge at play here, and they look like they're trying to challenge this double bottom, now triple bottom, with this test here at 1.2, and looking for the breakdown to the bottom of that wedge. If they fail to break out, or if we get a pullback in the overnight session, I would love to find 3.7 up to 4.1 as resistance to drive the market back down once again to see if they can finish the job. Now the bonds, good old bonds, everything is moving, but the bonds will just chug along. Now the bonds, they did have some really good movement, right? Especially for the bonds, all things considered. But you can see it's still very choppy, sloppy, lots of back and forth. Very good opportunities this morning, and now we're ending the day with another big breakdown and a little bit of a pause. So sellers are still very much intact to the downside, looking for continuation. And if we zoom out, we can see that this is not really much of a surprise. This bearish trend has been going on for a long time. We had a pause from around the 1st of March down to, the 7th, going into the 8th, but now we started kind of regaining that downward pressure. Now, we may be looking for some larger channels, but we're pretty far away from both edges of that, looking at the highs and the lows. The bottom edge is the only thing that's fairly close. So if we do start breaking to the downside, that may be the next objective below us that we could potentially look for to kind of finalize this bearish pressure. And that's going to be around 146.16 to 15 by the time it gets there. Still looking to sell, and after this big of a breakout move at the end of the day, I'm a little bit leery of looking at this. Whenever you have a nice ongoing trend and then the biggest move of the entire day happens at the end of the day, yeah, that's probably more of an exhaustive type move rather than a good continuation. So what I would really like to see is the market to kind of pull back in on itself, maybe find a double bottom, maybe head fake underneath it a little bit, pull back into this area around 147.05, and then find resistance for the push back down to the lows. They may not come back that far. They may only go back up to 29 or so, this little kind of mediocre high they had before they find resistance. But either way, definitely not looking to sell this far down, looking for better prices. On crude oil, talk about a reversal. We were looking at a very aggressive day yesterday, just a gargantuan drop lower. Found a little bit of a stagnation in the afternoon going into the morning and into the U.S. session. Not a surprise after a move like that. And they kicked it right back off again. Right after 5 o'clock, a massive spike lower and continuation to the downside. Pretty weak though, right? This continuation after a big move like this, you expect this kind of breakout to continue in on itself and keep going. And all it managed to do was go a few more points underneath it and then popped right back up again. Now, that little pop higher, that did form a little bit of a pretty strong area of resistance there. Once they finally broke above it, they tried holding it as support, and it broke back down, and now we're back to it trying to break out again. This is a fairly strong bullish rally working its way higher, and chances are we're probably cycling into a range now, given the failure at the bottom. Every time they came to the lows, it quickly twin reversal, snapped right back up towards the highs. And I think that's what a lot of the sellers are seeing now. The sellers, they see this move down, it fails. Okay, maybe it's a fluke. And then this one fails, they just lose confidence. Everybody on the sell side lost confidence, and you get the big spike higher. So basically that tells us one big thing. Short term, we're bullish. You could look to buy on little pullbacks, but that also tells us that the sellers simply just don't want to sell low anymore. There's not enough room for the market to go further by selling at the bottom. So they're looking for better prices. And what better place to look if we can get a correction back up towards the top of that breakout point around 50.30, 50.15, 50.07, all inside this area will be a big cluster of resistance that I would love to get my hands on. Now, 49.57 and the big $50 area we are probably going to get stuck around. We typically do around those areas, but all things considered, we're likely transitioning into a range, so looking to sell high and buy low, and maybe the only buying that takes place is off of profit targets. On the Nasdaq, much more range-bound than the other markets, but with a big breakout move to start the day off and a complete reversal right back in the opposite direction. Now that range, that really kind of stuck around for the better part of the day, and they're still contending with the highs and lows. 53, 54, 75 up to 66.5, and they just can't seem to get away from it. Nice breakout attempt early in the morning session, and a quick ricochet right back up towards the highs into a big drop lower, into a big drop higher. I like that. Big run higher, rather. So with all of this back and forth that we're getting here, it's obvious that we're in a range, and they're just widening the range out. So because of that, we're looking to buy low, sell high, but with the assumption that some of these ranges may be a little bit shaky, and you'd rather look for the equidistant breakouts. So if that is the case, we broke down by this distance, so you would be looking for a break up of about that distance as well. 83, 83.75 or so would be that area of resistance if the buyers really want to keep this going to the upside for that area. But still looking to sell above the highs for a fade back down into the range. And then the S&P, not as extreme as the Nasdaq, but still very similar. Lots of range-bound momentum. They tried breaking out of the highs. That failed. Tried breaking out of the lows. Even gave it one more shot before failing. Went right back up towards the highs. That breakout ended up failing right back down. And now we're cycling back up towards the top again. So we're looking for a very similar situation here. We're looking for a breakdown. That was this distance. And we're looking to use that on the highs right up here, and that gives us an area of potential resistance right around 23.74. Now we do also have monthly resistance at 23.72 3/4, so we may not make it all the way up to 74, but definitely looking to sell above rather than looking to buy to try to get the breakout. I would rather look to sell above the highs and potentially even scale in for a bigger position to drive the market back down again. So overall, very good movement, right? I mean, the S&P and the Nasdaq and some of the indices, they didn't do so great in terms of trendy movement, lots of volatile movement, but they've been really trendy over the past few days anyway. They've been the only ones that have been good. All of the other markets have been really slow, but today, today we have a shining light of hope that we may actually get these markets back to us before we start running into summertime. So here's my fingers crossed. Now, looking at tomorrow's economic calendar, we have a lot of stuff going on tomorrow. Very important to keep some of these things in mind. At 4:30 in the morning, we have out of the UK, the manufacturing production for month over month. Not a big number, really. The big one is going to be the EU Leaders Summit. That is tentative. That's going on pretty much most of the day. And that is a big mover. That's likely where a lot of the volatility came in today. Because today we had the Leaders Summit as well, along with the ECB press conferences, the interest rate decisions, all of that. And now tomorrow, the Leaders Summit continues. So as long as that's going on, we're expecting this volatility to keep going. At 8:30 tomorrow for the U.S. session, we've got the non-farm payrolls and unemployment rate. Now, the unemployment rate is forecasted at 4.7%. The previous was 4.8%, so we're expecting a little bit of a drop in that. And in terms of the non-farm payrolls, forecast is 190,000. Previous was 227,000. And then out of the Canadian dollar area, I always say out of the Canadian. Out of Canada, we have the employment change, which is forecasted at 2.5 thousand versus the previous at 48.3 thousand. So quite a drop they're expecting there. So basically what that means with all of that big stuff going on, play it safe tomorrow. And like we always say, make that plan, trade the plan, follow those rules, and you'll be A-okay. Until the next one, we'll see you then.